100 years ago, if there was a stock market crash in England, it didn't affect anybody. But now the US market goes down, the world goes down.
Robert Kiyosaki is an American businessman, an investor, and a famous author who wrote the widely known book Rich Dad, Poor Dad. Over the years, Robert has been very vocal about business, investments, and the stock market. He has given a lot of advice, tips, and recommendations to people who also want to achieve success and be financially free. Robert also made several predictions about the stock market as a whole, and some of his predictions actually came true. Recently, he has been very open about the possible market crash, which will be the greatest market catastrophe ever. Fortunately for investors, Robert believes that the best time to make money is during a downturn in the economy. In this video, we'll look at why Robert thinks that a massive market meltdown is coming. Stay tuned because we will discuss how you and other investors can turn this market crash into an advantage and how you can profit from it instead. So make sure to watch this video to the end. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Now let's get right into the video. A market crash is coming. Robert Kiyosaki, a well-known author, has predicted a historic market meltdown. Investors should be wary of his warnings, given his track record on previous predictions. For example, Robert began investing in Bitcoin in December 2020 when the cryptocurrency's price was only about $19,000. He projected that the price of Bitcoin would shortly reach $50,000 after his purchase. His forecast came true just 4 months later, with Bitcoin surpassing $64,000. Then he predicted Bitcoin will drop below $30,000, which happened again just 2 weeks later. With the present bull market, Robert warned that investors should not become complacent. While economic booms and soaring asset prices might be exciting, the subsequent downturns can also be terrifying. Robert is worried that investors are overconfident that the good times will continue, and they may not have hedged their bets in the event that markets crash without notice. The increasing prices of meme stocks, housing, and other volatile assets during the last year back up his fears and indicate that there is indeed a big desire for risks. So let's have a look more closely at what Robert is talking about. While he thinks the current stage of asset values is enjoyable and exciting, he also thinks investors should be prepared for a massive drop, which may be terrible. He suggests that while everyone is speculating about how long the bull run will continue, investors should consider how they would do financially if the market crashed today. Robert believes that asset values could fall off a cliff anytime, causing people to rush to register profits on their existing investments, further lowering prices. Kiyosaki feels the existing state of affairs is unsustainable, and he blames one entity for the approaching disaster: the economy today. According to Robert, the Federal Reserve is harming the American economy by overprinting the US dollar. In the recent year, approximately 20% of all dollars in circulation were printed, resulting in a significant increase in inflation. Almost everything is more expensive now than it was before the outbreak of COVID-19, from coffee to cars. The Federal Reserve and the US government have injected $4.5 billion into the economy through stimulus payments and other incentives. American households have also had additional money to spend because they were stuck at home for most of the year. Thus, together with the stimulus checks, has resulted in an excessive amount of money pursuing products and services. Businesses temporarily closed and laid off employees as the pandemic hit and governments restricted their borders. So when the demand returned and the government eased the lockdowns, businesses were scrambling to recommence production. But a shortage of willing workers, along with the large price rises in commodities, has left many businesses still vulnerable. As a result, businesses have little choice but to raise their prices, resulting in unprecedented inflation in recent decades. One good example of this is the semiconductor scarcity and its influence on the consumer electronics market. Everyone wants a piece of the market because semiconductor chips are used in cell phones, laptops, and gaming consoles. This has resulted in large price jumps, such as with NVIDIA's multiple graphics cards, or huge supply shortages, such as with the development of the PlayStation 5 and Xbox Series gaming consoles. Now, according to Robert, the Federal Reserve will have to hike interest rates to manage excessive inflation, which will cause stock, bond, real estate, and other commodity prices to plummet. He claims that the American economy is confronted with a number of issues, including Social Security, Medicare, spending, and a big debt that must be repaid. He believes that the government can only come out of this crisis in one of two ways: either raise rates causing a market crash, or continue to print more dollars, causing a massive crash never seen before. Kiyosaki believes that the only way for investors to protect themselves is to invest in assets that the US government cannot manipulate. Now, before we move on to the next point, if you love content such as this, kindly give this video a like, subscribe to the channel, and turn on the notification bell so that you will know when we've posted new videos. We'd love to be a part of your financial journey. Now, moving on to the next point. The new money. According to Robert, the conventional wisdom of going to school, owning a property, paying off debt, and investing for the long term will not work in the future. He believes there is no purpose to conserve money because the Federal Reserve continues to print more money. People who save money will eventually lose money due to inflation over time. Robert suggests that as long as the Federal Reserve continues to print more money and the government continues to dish out subsidies to Americans, they will be incentivized to stay at home, which will also aggravate the supply problem, resulting in huge inflation. However, by borrowing money, investors can take advantage of the current situation. Most people believe that debt is dangerous, especially during a recession. But for Robert, given current interest rates and availability, investors would be better suited to borrow money and put it in assets that create cash flow such as real estate and equities. The only way for investors to avoid the upcoming crash is to acquire gold, silver, and Bitcoin. For example, Robert cited the value of gold in 2000, which was only $300. However, gold has already increased six-fold since then, while silver also increased seven-fold. The digital version of gold and Bitcoin has also reaped the most benefits from the Federal Reserve, printing more and more money. Bitcoin has increased in value from $100 in 2013 to over $30,000 today. The impending crash in the market, though, is both good and bad news for investors. The good news is that there are many undervalued possibilities for investors to benefit from amidst the market fall. For example, soon after the 2008 mortgage crisis, property prices plummeted, leaving plenty of opportunities to buy. Similarly, investors with sufficient liquidity will be able to profit from the current crisis when all asset values collapse. The bad news, however, is that the impending catastrophe will be severe and will probably last for a longer period. The forthcoming market catastrophe would be similar to the Great Depression, which lasted 4 years and left many people suffering long-term consequences. So before we end the video, here's a quick recap of the discussions we had. Robert has warned investors that the current bull market could be overshadowed by a major market meltdown. Based on his previous performance, his warning should be taken seriously by investors. Robert blames the Federal Reserve and the US government for the US dollar's gradual depreciation because of unstable monetary and fiscal policies. He believes the current scenario will end in one of two ways. Either the Fed will raise rates to battle inflation, or it will continue with its existing methods, resulting in a major disaster. With a big crash on the horizon, Robert advises investors to put their money in gold, silver, and Bitcoin, which cannot be controlled by the Federal Reserve or central governments throughout the world. If history is any indication, his investment advice could be correct. So that's it. What are your thoughts on Robert Kiyosaki's forecast of a massive market crash? Do you agree with his analysis? Let us know in the comment section below. We'd love to hear your thoughts on this. And with that, thank you very much for watching. If you like what you've watched, stay tuned for more videos. Bye, financial buddies!